Hey guys, how's it going? Welcome to Black Coffee Finance. My name is Henry, and today we're going to be talking about everything you need to know about checking accounts. It can be overwhelming to try and figure out how to set up and manage a bank account. There are so many different banks. How do you choose which one to do business with? And how do you avoid being charged fees? And once you have a checking account, what do you do with it? Let's start by talking about what a checking account actually is. So a checking account is basically a personal money reserve service offered by virtually all banks and credit unions that allows withdrawals,
taking money out,
and deposits.
putting money in.
They might also be referred to as demand accounts or transactional accounts. Checking accounts are very liquid,
Meaning money is frequently moving in and out.
and the funds in a checking account can be accessed using checks, of course, automated teller machines,
Also known as ATMs,
and electronic debits.
also known as debit cards.
Checking accounts enable customers to deposit checks either in person with the teller or online via the bank's app. You can deposit checks or cash from either people or institutions, and the bank will then hold that money for you in your account after retrieving it from the check's writer. This money can then be used for transacting in various forms, such as paying for goods with a debit card, writing checks, or it can be transferred from your bank to pay off a credit card balance, for example. Checking accounts can be opened easily enough at a bank or credit union, either in person, possibly over the phone, or more commonly these days online. The specifics may vary from bank to bank, but in general, what you'll need to open a checking account include some form of government-issued ID like a driver's license, your date of birth, a physical address, your social security number, and an opening balance.
Otherwise known as money to put into the account. Some banks may require a minimum deposit.
So you've gone to your bank and opened a checking account. Now you just have to wait for your debit card to be mailed, and then you can use it at stores or online for purchases. You may also be mailed a checkbook, which can be used in the same way as a debit card would be. When you use a debit card at a store, the money you spend is immediately pulled from your account. With checks, it may take a day or two to process, but once it processes, the money is also taken directly from your account. With the advent of debit cards, credit cards, and now online payments, checks are quickly becoming a relic of the past. But people still may use them in certain situations like to pay rent or utilities. Checking accounts are purpose-made for quick and consistent transacting. And the nice thing about checking accounts is that unlike some other types of accounts, like savings accounts, you're generally allowed unlimited withdrawals and deposits, which make them ideal for everyday spending and transacting. Some things that you can do with a checking account include writing checks, making purchases with a debit card connected to your account, and withdrawing and depositing cash in ATMs. Additionally, you can visit your local bank branch to make withdrawals and deposits, assuming your bank has brick and mortar locations. Generally, banks will offer online bill paying services for one-time bills or help you set up recurring payments for things such as utilities or internet or other bills you may have. And if you have multiple bank accounts, you can easily transfer money online between these bank accounts. The downside of checking accounts, as opposed to some other types of accounts, is that they pay little to no interest. Interest is the rate at which a bank will pay you for keeping money in your account. The amount you make is determined by the amount you have in the account multiplied by the time the money is in your account, multiplied again by the bank's interest rate. So if a bank's interest rate is 1% annually and you had $100 in your account for 1 year, the bank would pay you $1 for keeping your money in the account for that year. That $1 is going to be paid out monthly in increments of like 8 cents or $1 divided by 12 for each month. In real life, most banks have interest rates on checking accounts that are well below 1%. You're looking at like 0.01 to 0.05%. I think the national average is 0.06%. Your money's not going to grow at any noticeable rate unless you literally put more money into it. So for me, a good practice would be to keep the amount of money you need to pay for 1 month's expenses in your checking account and keep any excess money in other types of account where that sum can grow more effectively, which I'll talk about in future videos. If you opt to use physical checks, you'll notice that there are 3 numbers at the bottom of the checks, and each of these numbers has a different meaning. There's a 9-digit number that identifies your bank, which is often called the ABA or routing number. This is sort of like a financial zip code, letting the receiving institution know which bank the money needs to be taken from. The next number is the account number, which indicates which account or individual the money is coming from. You can think of this as a unique identifier, sort of like a social security number. And finally, there's the check number, which will be different on each check in a checkbook. This is used so that the same check does not get processed more than one time. If you ever have to write a check, you'll notice that there are several fields that need to be filled out. In the section that states pay to the order of, you enter the name of the person or entity you intend to give the money to. In the box to the right of this, you enter the amount numerically that you are paying them. And then below the pay to the order of line is where you write phonetically the amount of money that you're paying. So for example, if you're paying someone $100, you would write 100 as it's spelled. O-N-E space H-U-N-D-R-E-D. Whereas up here, you would write the number 100, 100. This is essentially so that it's easier for the bank to process the checks and understand your intention, as well as help prevent tampering by whoever's receiving the funds. The bottom left of a check is an optional field called the memo line, where you can write a note to indicate what the check is being used for. You might write March rent or utilities or something like that. And then in the bottom right field is where you'll put your signature. If you happen to be receiving a check, all you need to do is endorse it, meaning sign it, on the back of the check in this field right here. Once you've endorsed it, all you need to do is take it to a bank to have it deposited with a teller, or take a picture of it and deposit it online via your bank's mobile app. When deciding what bank or credit union you want to open a checking account with, you'll want to do some research and not just use the bank that your parents use, because not all banks are created equal. Different banks are going to have different fees, different minimum deposit requirements, different opening balance requirements, and some may not have any of these requirements at all. You may have to pay fees for certain services or maintenance, which can be costly and add up over time. So there are certain banks that are online only. And because they don't have brick and mortar locations, they will have lower overhead costs. The benefit of having lower overhead is that they can often give perks to incentivize new customers, such as lower fees, better interest rates, and free ATM access. The downside of these online-only banks is they can't offer in-person assistance, but in basically all cases, you'll be able to reach someone over the phone if you need to. Banks want to get new customers in the door to open checking accounts, because oftentimes if a customer opens a checking account with the bank and they have a good experience with that institution, they may be more likely to put more money into the account and possibly open other bank accounts with them in the future. So oftentimes what banks will do is offer one-time bonuses for opening a checking and or savings account with them. So that's something to look into when you're opening a new account. These bonuses could range from 100 to 200 to 300, just depending on what the bank is willing to do and how much they want to have you as a new customer. The bonuses that these banks offer will usually come with a couple stipulations. You may have to put a certain amount of money into the account. You may have to have at least one direct deposit within a certain period of time. And you may have to keep the account open for a certain period of time, like 6 months, 3 months. After all the requirements are met, the bank will give you that bonus deposited right into your account to use for whatever you want. Some people will even use these bank incentives as a way to make extra money. They'll open an account with a bank, meet all the requirements, and then after meeting all the requirements for that bank and getting the bonus, they'll open a different account with a different bank and meet their requirements to get their bonus. And if you have enough money, you can open multiple accounts at the same time and meet multiple requirements at the same time, and it just compounds the effect. Let's take a look at the bonus offers that are available right now. Okay, so when trying to find different bank bonuses being offered, 2 different sites I like to go to that usually have good information are NerdWallet and Bankrate.com. These 2 sites generally update monthly, and they'll show you a compiled list of different banks that offer different bonuses. For example, this HSBC Premier Checking Bank, they're offering $450, expiring March 31st. And it tells you some of the requirements that are needed. This one, for example, you do need a direct deposit, and it's actually quite a high minimum deposit required. That one might not be worth your time if you can't get to this amount over 3 months. There are definitely ones with easier requirements to meet, but they do generally offer lower bonuses, like this Bank of America. And some of them don't have any minimum deposit required, like this Chase Total Checking. They're going to offer $200 through April 14th. They do require direct deposit, so this is something you could change with your employer, but they don't require minimum deposit, so that one seems like it would be pretty easy to meet. If you were to try to pursue one of these, you would just want to either go to the company's website or click on the Learn More, and it would probably direct you to the company's website. Then you go on their site and apply. And then if we jump over here to bankrate.com and scroll down, you're going to see a similar looking list. It's going to tell you the name of the bank and the bonus that they're offering. And then as you get down further, it's going to go more into the details of what you need to do to earn the bonus for each of these banks. I want to stress, though, that the bonus that the company offers shouldn't be your only consideration when choosing a bank that you ultimately want to stay with for your checking account. I would also consider other perks. For example, my bank of choice is Charles Schwab. They're not sponsoring this video, and I'm not saying that you have to use them. I just happen to like their services. Some of the things I like about their checking account is that they offer reimbursement of all ATM fees. So regardless of where I use an ATM or how much the fee is, it could be $2, $5, $10, $20. Schwab is going to reimburse all of those fees at the end of the month, and it'll just go right back into my checking account. Additionally, when I travel abroad, I'll possibly have to convert currency, which Schwab will do for free, whereas a lot of other banks will charge you a fee for, so it's very traveler friendly in that way. And I believe they don't have any minimum balance requirements, so I could literally have $1 in my account and they won't charge me a fee, whereas a lot of other banks will require you to have at least like $500, $1,000, $2,000 in your account. Otherwise, they'll charge you a maintenance fee, and those fees can be upwards of $10, $20, or $30, so it can add up really quickly. It seems sort of predatory and exorbitant, but that's just kind of the way it is, unfortunately. And so that's why it's up to you to do your due diligence and find a bank that charges little to no fees, and then figure out how to avoid incurring what fees they do charge for. So if you're new to finance and managing money, you might be asking yourself, what's even the point of having a checking account and what's the benefit as opposed to not? And my response to that would be that the benefit of having an account is that your money is much safer. In a checking account, unlike cash, your money is a lot less likely to be stolen or destroyed. And in the event that it is stolen or destroyed, there's options for recourse to recover your money. Some people distrust banks for a variety of reasons, and they may or may not be legitimate, but understand that if you are the type of person to keep stacks of cash under your pillow, you're taking on a lot of risk. Your house could be broken into, your money could be stolen, your house could be burnt down, it could flood, it could be destroyed. And when your house is destroyed and your money's gone with it, it's gone for good. You're never going to get it back. Alternatively, if your money disappears from your checking account, you can take actions to get that money recovered. It may take time and effort, but ultimately your money is most likely going to be recovered. Pretty much any bank you're going to use is going to be FDIC insured. FDIC stands for Federal Deposit Insurance Corporation. Banks are pretty much always going to advertise that they're FDIC insured, and what that means is that the government will guarantee up to $250,000 per account with that bank in the event that the bank fails. So even in the event that your bank goes bust, you will recover your money. Some of the topics I cover in this channel I would consider extra or optional, but checking accounts is not one of those. I would consider a checking account absolutely essential, and that's one of the reasons I decided to start with this topic, because the first time you walk into a bank, this is most likely going to be the first type of account you open with them. And then you may open other accounts, but they're probably just going to be building off of this checking account. And that's about everything I wanted to cover in this video. I hope you found some of the information useful and helpful. If you liked what you saw, a quick like and subscribe would be much appreciated. And in the next video, we'll be talking about savings accounts. Thanks for tuning in, everybody, and we'll see you next time on Black Coffee Finance.